Okay.
Take it away, Gary.
Thank you very much, Sarah. And thanks for inviting me today. Thanks, Bobby. Good to see you again. And thanks everyone for showing up for a virtual talk that I hope doesn't, I mean, it's budgeting, right? And budget management. So I can't think of a more exciting topic at 2:30 in the afternoon. But that's because I've, like part financial manager. So it's great to see you here. And I did get a registration list from Sarah. So I have an idea of where you're from. And I actually lived in Brattleboro for a while. So my information is dated, but lived in Chesterfield, lived in Brattleboro. So I love that area. So I am going to, and I see there's have all sorts of different backgrounds, municipal, there's the VHCB, I think, or Vermont Council on Rural Development, and all sorts of other things. So thanks for joining. And of course, I have special affiliation to Gary, Gary Fox. I don't know the man, but he's got a great first name. I am going to, Sarah, if you could like monitor the chat box, because I'm really bad at doing one thing.
Yes.
Oh, did I say one thing? I meant two things at a time.
Yes, I would be happy. Would you like me to interrupt with questions or pause, like hold till you get to a stopping point?
I have pauses built in.
Great.
But if there's something that's really relevant, just interrupt.
Perfect.
So thanks everyone. Can you see my screen, Sarah?
Yep.
Good. Okay, so this is an introduction to budgeting and budget management. It's this huge topic. So I hope that and I have quite a few slides. So I'm going to try to go through them fairly quickly. We'll talk about budgeting, budget management, and controls. But again, thank you, Sarah, for inviting me. And here's my introduction. I'm assistant professor, extension assistant professor. I work out of the St. Albans office, or I used to at least 15 months ago. I actually moved out of my office to make room for a team that worked together that needed the physical space. So I may be working from my basement for some time. I was former associate dean of extension, and it's a $20 million operation, and I was responsible for everything outside of programming. So including finance, HR, IT, real estate, communications infrastructure, that sort of thing. And now I do, in the last 2.5 years, I've been doing HR and budget consulting, a lot of that for Vermont public libraries. There's about 185 of them in the state, as well as others like this, for instance. And that's half my job. The other half of my job is I work for Lake Champlain Sea Grant on helping enhance the water quality issues, education, outreach, and research around Lake Champlain, which is working with SUNY Plattsburgh as well as NOAA, known best for the Weather Service. But I do coastal tourism and municipal environmental hazard resilience work, again with municipalities. And I didn't want to spend too much time on this slide. I work for, I'm a town official in the town of Georgia. I'm a trustee on the library board, and I'm the treasurer. And that NEMRIC, some of you, I think you have municipal experience, may recognize that as the Vermont municipal accounting software is called NEMRIC, and PeopleSoft is what I worked with in at UVM. I also do some Quicken, not QuickBooks. I'm not fancy enough for that, but I do Quicken. Learning objectives today, I just want you to appreciate how your organization's values and vision and strategic plan connect to the budget. That's a really important thing to remember. And I want you to be able to describe a few basic accounting terms, maybe a few extra basic accounting terms, more than you know walking in as you walk out. Understand conceptually and tangibly what a budget is, be able to describe the budget cycle, and possess increased knowledge about managing the budget. I'm trying to move my screen, so I'm a little looking at this little camera a little bit better. And then understand a bit more about financial controls. And I did want to note Bobby Kilburn. I've seen her presentation. I saw it last year, and it's really, really good. Really gets into this project management. I'm hoping to be complimentary to what she will be presenting tomorrow, but there will be a little bit of repeat, but repeat isn't a bad thing because some of these concepts or some of the terms bear repeating. The run of show is I just wanted to look at the burning question review. There's not much to say about that. Talk about connecting the mission, vision, and values. Talk a little bit like a bookkeeper. I know that you'd rather be talking like a pirate, but bookkeeper in this case. What is a budget? Steps in the budgeting process. Key points in preparing your budget. Managing that budget once you have, and budget controls, or how to keep yourself out of jail or others out of jail. And you know that, and that ends with that I have, everybody loves a good embezzlement story, and I've got one. What burning questions that you had? There really weren't too many burning questions when I looked at the registration list and the notes that you put in. Most of you were just wanting to learn more, or perhaps you had a project coming up, or you were thinking of expanding your business, something like that. So hopefully the things that I will try to explain to you today or teach you today will be helpful. And then there were two specific questions that we received. What options are available for collaborative grants from COVID relief funding? And then what models exist of a business and nonprofit partnership? Now, I'm going to say right off, and Bobby might be able to address this tomorrow, or maybe address it right now, but there is so much ARPA money out there, funding available, that really you have to just dig the research at the ACCD website, Agency of Community, what is that?
Commerce and Community Development.
Thank you, Commerce and Community Development. Thank you for saving me. Has a lot of information on their website. Small Business Administration has a lot of information on their website. I know that there's ARPA funding coming to municipalities. I've talked to my town manager about that. And there's ARPA funding coming through the Vermont Department of Libraries, for instance, specifically for libraries. But so that I am certainly not the source for that kind of information. And I know that models do exist of business nonprofit partnerships. At UVM Extension, we're a nonprofit corporation. UVM, we work with private industry quite closely. And my library, which is a municipal department, is working with Gardner Supply right now, a for-profit company. So I'm not going to spend any more time on these issues, but I've got the questions, and I will certainly get back to the person who wrote them, seeing if Bobby had anything to add before we get back.
Sure, Gary, thanks. Yes, I would encourage all of you to sign up for BDCC's newsletter. Anytime we know of funding that may be available, either for nonprofits or other entities, we put that in our newsletter that goes out on a frequent basis. So, I know it's another piece of email that you're going to get in your inbox, but it really does provide access to all of the ACCD resources and any other resources that we are aware of, either through private foundation, state, or federal funding sources. So that's a great starting point.
Thank you, Bobby.
And Gary, I don't know if you're advancing your slides, because I know you have slides on what you were just talking about, but we're still seeing learning objectives.
Really?
Yeah.
Oh, let me, my screen sharing is paused.
Oh.
Well, I'm going to stop that. I'm going to try again. Now
Great.
I'm screen sharing and it's not paused. So thank you so much, Sarah.
Welcome.
You missed a lot of good slides like this one. It's one of my best. So talking about strategic planning and about values and mission and vision. Of course, values are what you hold true, right, in your organization. Like at UVM Extension, some of the values include respect for others within the organization and outside the organization, or clear communication, or using resources responsibly. And then the mission is what your organization does, why it exists. And then the vision is, what you see in the future. So how you spend your money reflects your values, and it reflects your mission, and it reflects what you hope to become. And I think when we're talking about project management, you're all thinking about projects in the future. It's that vision. So the budget is really important to funding that vision. An example I use that everybody can relate to is like in your personal life, the money that you donate to organizations shows your value. You're using your money in your budget to help support your values, and it just helps support your vision of what you see yourself in the community being. And that's all I'm going to talk about. That it's just I'll touch on the connecting the budget to strategic planning again, but let's talk like a bookkeeper, sort of. Accounting is just a way to gather all the information about your organization, fiscal information about your organization or company together. You can think of, in the old days, maybe they had a little box they put receipts in, or maybe they had, of course, a ledger, a book where they wrote expenses and revenues in. Became a spreadsheet, which became a fancy database now, like QuickBooks is a database. An accountant is someone who does the accounting, but bookkeepers also do the accounting, and most people rely on a good bookkeeper. Bookkeeper does all that work in paying bills and sending out invoices, sometimes doing payroll. And the accountant, we tend to think of the accountant as more like that CPA firm that the bookkeeper hands the information to do the 990 or the tax form, whatever tax forms are necessary at the end of the year. Come on, there we go. Okay, just briefly talk about, again, these are basics. So I apologize when you're working with a group, there's some folks that might have never heard these terms or heard these terms and want to know more, and there's others that know all about these terms. So I'm going to try to go through here swiftly so that it doesn't get bogged down too much. Fiscal year is what we do, right? A one-year period that companies and governments use for financial reporting and budgeting. And there are all sorts of different financial years. The state financial year is July through June. The federal financial year is October through September. Most municipalities, about 2/3 of them, are July through June, but like the town of Georgia is a calendar year, which is about 1/3 of the municipalities in the state. And then, there's other types of fiscal years too, amazingly. I'm on a federal grant that the fiscal year is February through January. So try to figure all those four out that I'm being paid off of. Grant period is, if you get a grant period is just the period of time between the effective date and the expiration date. So it's not really a fiscal year, it's just a grant period. And some grants can be 4 years, 5 years, 3 years, 2 years. It can be all over the place. But the accounting for a grant really isn't determined by calendar years or state fiscal years. It's really about the grant. Two different kinds of accounting. Well, there's actually something in between these two, but you may have heard about accrual accounting and cash accounting. Accrual means that revenue and expenses are recognized and recorded when they occur, and in cash, things aren't documented until money exchange hands. So I'm going to try in my next slide to demonstrate it a little better. So I'm sorry, this is, I hope you can see it. I hope, if you have a small monitor, I apologize. But this is a slide that shows during March, a business had a credit sales of $2,000, and the debtor, the person that bought it, won't pay for another 6 weeks. In addition, somebody who bought something in February but didn't pay for it in February repaid $600. So in a cash accounting situation, March, you see $600 of revenue. So because even though this person bought something in February, they paid for it in March. So you only write it down when cash changes hands. In an accrual system, you got $2,000 of revenue because you have credit sales of $2,000, even though it's going to be paid in another 6 weeks. So say it was early March, you're going to get $2,000 worth of revenue in April. Okay. Very quickly, cash-based versus accrual. Cash-based accounting is used by individuals like me, by very small companies, that don't have inventory, that just maybe buy and sell very quickly, don't have capital items that they buy that they have to depreciate. Some nonprofits, some towns, although my town is a modified cash accounting system, accrual system, it's in between. But you can see these are just some of the good things and the bad things. Cash flow, if you do cash-based accounting, you can see very clearly the cash on hand versus accrual-based. You may see revenue or expenses not paid yet. So it might, when you're looking at cash flow or looking at your accounts, they may not make as much sense to you. You can see long-term trends better in accrual. You can see an accounting complexity increases with accrual. In accrual, you need that accountant, you need that bookkeeper, because there's things called prepaid expenses and deferred revenues that have to be accounted for at the end of fiscal years. So I hope that wasn't too deep into the weeds. I just wanted to have a little breather. Are there any questions at all? I should try to open the chat.
None in the chat at this point, but feel free to add them as they come to mind.
Okay, I cannot see the chat. Why is that? Well, I don't want to mess up my screen sharing. So if you want,
I gotcha.
Okay. So is there one in the chat?
There's none.
Oh, none. Oh, okay. I dropped the N. Sorry.
It's okay.
Okay, talking the talk a little bit more, you might have heard about the general ledger. Accountants or bookkeepers say, refer to the general ledger. The general ledger is just a complete record of the financial transactions of your company or organization throughout its history. That's why you can compare this year to last year. You can look at trends over time. It's all from the general ledger. There's different funds in the general ledger, and there's different all sorts of things in that general ledger. Chart of accounts, you may hear a reference to chart of accounts. This is a list of the fields. It's like columns in a spreadsheet that's used by an organization to define each class of items. And to the top right, I hope you can see it okay, but it's a list. If you go from the top down, like it's coded, revenue is coded with a certain number, a certain span of numbers. Expenses are coded by a certain span of numbers. In this case, it's from the number 2000 to 2999, then assets, liabilities, and equity. So also, I'm going to go back to this, but you can see an income statement is just a comparison of revenue and expense over a certain period of time. A balance sheet shows assets, liability, and equity. So we'll talk a little bit about that in a few moments. In the bottom right-hand part of that slide is an example of the town of Georgia's budget. You can see there's a series of numbers, and an accountant and bookkeeper can read those numbers. It's the language for them, and it tells them what it is. If you don't know what that number is, the last part, 22.00, is library supplies, for instance. The 70 means something. The 05 is the department in our case, it's the library. And when you think of a field of accounts, they're all connected in a big database, all connected together. Okay, I think that you are all very familiar with this: revenue and expenses. Invoices is just a request for a payment for a purchase, right? You get the electric bill in the mail, so that's an invoice. A document that proves payment is a receipt. So you, if you're in a for-profit business, or if you have sales in a non-profit business or other revenues, you know, you'll be sending out invoices, you'll be sending out receipts, you'll be receiving invoices, receiving receipts. These are really important in documenting business purchases, and just, you know, items that I think that you're all very familiar with. There's this thing called a purchase order. If you work in a big enough organization, or a formal enough organization, a purchase order is required to buy things. And that is from the purchaser to the vendor or central fiscal authority that authorizes a purchase. For instance, at the library, and this is true at UVM as well, purchase orders are only required at X dollars and above. But in the town of Georgia, every invoice that the library receives, I have to create a purchase order to tell the bookkeeper at the town that this is a valid business expense. This is the chart string or the field to use, you know, where to expense it to. And I sign off on it, and it's a legal document. And it gives the authority for the bookkeeper to send a check to the vendor. Accounts payable, money that you owe, and accounts receivable, money that is owed to you. So this is important things to learn as you learn more about business accounting. Very important, and there's all sorts of ratios that are created to see how you're doing, and you know, how old is the money that is owed to you, how far behind are you on bills. All those things are common accounting things that you will run across. A reserve, and this is going to sort of touch upon Bobby's presentation. Bobby will talk about capital budgets a little bit. A reserve is a set aside, you know, a discretionary pile of money for future use. Again, at both UVM Extension and in my little library, we have reserves, and the reserves are there for special projects at UVM. There's all sorts of rules that I don't understand about, that the controller certainly does. But in the library, our reserve is set up for capital purchases. So if we need something of a capital nature, and I'll talk about that in a short time, then we use those reserves to buy something. And if you wanted to try to remember what a capital item is, it's generally something that's not consumable in the normal course of business. It lasts for a while. So it could be a year, it could be 5 years. Think of paper for your photocopier as an operational expense. And if you purchase your photocopier, that's a capital expense. Oops. Okay. Three things. These are really important in funding a lot of organizations. Grants, like UVM Extension is now, I think, 60% grant funded, which is so different than even 20 years ago. A grant is something that you get by applying for it, right? You see a request for proposals, you see what they want to paid for, you see that your vision, mission, and values fits into that, and you apply for a grant. And in the grant, you have a very specific set of things you're going to do. You have this work that you promise to do, and this is the budget that you're going to do it with. So a grant, you don't have to repay the funds back, but I say usually, but I would say they always require reporting, often on a quarterly basis and always in an annual or end of grant basis. So it's something that you get to do something very specific, and it's very important to keep the accounting around a grant very, very, you do very good accounting and record keeping associated with a grant. Endowment. An endowment is a donation or donations of money that protects the principal. Then you get the idea. You live off the interest, and hopefully you will have a policy on how you invest the money, how you spend the money, and how you budget that money on an annual basis. But the idea of the endowment really is to produce a reliable income that grows at least at the pace of inflation over time. It's in perpetuity. And there are some really, really good examples of amazing things at libraries, for instance, in the state of Vermont, where I'm thinking of a small town, a nurse, donated, like when she died, she donated some money to the library, and now it's grown to like $700,000. And that money, if you think of like maybe 3% of that a year or 4%, that like buys a lot of programming and stuff. So endowments can be very powerful. A gift is meant to be used right away or in the short term. And in fact, at UVM, if we have a gift account that isn't showing that it's being drawn down, we get a letter and we have to write why that happened and what we're doing to fix it. That is how we're going to spend it. Restricted versus unrestricted. Restricted means that somebody gave you money for a very specific thing. You can only spend it on X. Unrestricted means you spend it on whatever you want. So again, I'm sorry, I'm going back into library examples, but restricted means somebody gave you money to buy books. So that's what you can only use it for books. Other person gave you money for whatever the library needs. So that gives you, of course, a lot of flexibility. So unrestricted gifts are great. Restricted gifts are great too, but they're restrictive by definition. Assets and liabilities. Assets, again, think about your personal situation. Asset is everything that you own, right? So maybe you have a car, maybe you have a house. They have value. So that's what your asset is. Liabilities are accounts showing everything that the organization owes. Debt, loans, that accounts payable. In assets, it's also accounts receivable. Savings accounts, reserves. So it's everything you own, and liabilities are everything that you owe. And here you've seen this chart of accounts on the right-hand side again, and I just circled in the green is the income statement, or sometimes you hear it's called a profit and loss. And it shows the organization's revenues and expenses during a particular period. You can produce it for this first quarter, or you can produce it for the month. You can produce it year to date. That's an income statement. It shows you where you are right now, how you're doing this fiscal year. A balance sheet is a snapshot of the organization at a specific point in time, such as the end of your fiscal year, which shows you all your assets, all the liabilities, the equity. So assets must always equal the sum of the liabilities and equity. And I think you can see why. If your house is worth $300,000 and you owe $200,000, then the equity you have in your home is $100,000. So the assets, $300,000. the sum of the liability and equity. You owe 200 and you're worth a 100. It's equal to that. So, you know, if you speak with a bookkeeper, you speak with an accountant, you can get much richer information than this, but just as a very quick snapshot. Fiscal reports. So fiscal reports, and this is going to be very important as you're managing your budget. There's a lot of different kinds of fiscal reports, and I'm just going to talk about a couple of them. One is a budget status report. It's basically an income expense report. It tells you at a very high level, shows you revenues, expenses, encumbrances, that is what you've promised to pay, and remaining balances. And you can have a budget status report for a project, for the big budget that has projects within it, grants, all these things. And then a budget transaction detail report is a report that expands on that budget status report. For instance, library utilities here, we've spent $2,500 even though it's early in the year. And a budget transaction detail report will tell you how much is electricity, how much is propane, how much is, what else is in there? Telephone. No, telephone's another one. I think we have another utility. But to get at the detail, which would expand this table dramatically, but that's where you can get at the detail. Now, I have a question. If you could type into the chat what software or system that you use, that could be helpful to me. I know QuickBooks is quite a overwhelming choice. It's really amazingly good to use, but so are other softwares. There, I can see the chat now. I found it. QuickBooks. Yes. Oh, Bobby, I see that you had noted about a chart of accounts approach, a new alpha approach. Yep. QuickBooks. Okay. Great. Thank you very much for responding. Looks like QuickBooks is dominating. Okay. Capital budget. Just talking about this very briefly. A capital item is something that's not consumed in the ordinary course of business. Capital items are often funded from current expenses, like some businesses treat laptops, for instance, like a capital item, and others may not, but you can fund capital items from current expenses, especially if they're relatively inexpensive. If you need a new desk, if you need something that's, I don't know, bigger, or if you've budgeted it. Or it could be, purchased from reserves or special funds. Capital items may become a fixed cost and they're depreciated over a set period of time. Now, Bobby knows this backwards and forwards about the types of depreciable assets, how many years you can depreciate them. Just so that you understand that in the course of business, you would have an operating budget, kind of an annual operating budget. You'd also have a capital budget as well. And a capital budget, of course, can be part of a project, especially if you're doing like adding an addition to a building or something like that. So I'm going to pause here. See if you're all breathing still. Let me stretch. Okay, I'm looking at the chat.
Yeah, no questions.
No questions. Okay. Okay, well, let's switch gears a little bit and talk about the budget. So a budget is just your plan. It's stated in monetary terms, but it's what you're going to do. It's what you're going to get in revenue, and it's what you're going to spend with that revenue. And it's for a set period of time, right? It's for a fiscal year. Often the budget is a subset of somebody else's larger budget. In our library's case, the $140,000 budget is part of the $2.3 million town budget, or a department within a university, or a program within a department, or a project within an organization. All these things can have budgets. And the way you build a budget is the top budget manager asks the other budget managers to make their budgets. The other budget managers ask the folks that are doing projects and grants and other things to do their budgets. So it's this, and you can imagine during budgeting time, it can get pretty complicated in a large organization. Now, if you're working in a smaller organization, it's more personal. It's much easier to communicate between each other, hopefully, and it's a little bit more clear cut, but still, it's a job to do. This is just an example of a public library as an example of revenue. And this is fairly typical for a municipal library where they might get sales and fees. Maybe they have, something that they sell T-shirts, or they might sell mugs. They could do photocopying for people. We do at our library, and it actually, we do it to try to cover the cost of photocopying, but it is a revenue source. An endowment, this particular library has an endowment, and they're very lucky to have that, and then local tax. So you'll see pie charts like this that can get very complicated, and but basic revenue and then basic expenditures. Salaries are often a big chunk of expenditures on an annual basis. In this case, again, a library looking at buying books and audio visuals and periodicals and ebooks. I mean, ebooks have been huge this past year, as you can imagine, with us all trapped in our houses, and as well as interlibrary loan has been hot, where I've actually borrowed a lot of books from the Brattleboro Library this past year. Benefits and other operating expenses. So you can imagine you can add such levels of complexity to this, because just thinking of salaries, I just have it salaries and benefits. Well, look at benefits. I mean, there could be retirement benefits, there could be health benefits, there could be a health savings account benefit. There could be, in salaries, there's hourly employees, there's permanent full-time employees, there's in other operating expenses, there could be oodles of things from, supplies and advertising. You can imagine, and you with your businesses and organizations have seen the budget, so you know how complex they can become. Quickly switching to the budgeting process now. So questions to think about. Excuse me while I have a little bit of water here. And please, if you want some water, you have some too. Okay, always remember your strategic plan. That kind of like drives the whole show. And knowing how the organization is funded or how you like to be funded. That's part of the vision. Who's on the budget team? Who in your organization is appropriate. In our library, we have basically, it's myself and the director put the budget together with the chair of the trustees, and then we keep the chair, the trustees informed about it. How are expenses determined? Well, that goes back to your, what your strategic plan about your vision and mission. What are you spending money on? Who has the final say? So that's always an interesting question. You think it's fairly straightforward and obvious, but in our case, it's funny how Vermont has set up library law, and town law, that the library board of trustees is fairly equivalent to the select board in power over the library. But really, You know, you need to know who has the final say, who's the decision maker, who's going to say, you know, this is it by consent. Is it a power outside your department, that sort of thing. And has a budget calendar been established? So let's talk a little bit about that budget calendar. This is just an example, the budget month, you know, 1 through 12. So just think of your budget year. Need identification happens throughout the year. And we write down notes, for instance, in January and February and March, when we think, oh man, we gotta have to upgrade this this computer at reception because it's just like 7 years old now. So need identification happens through the year. And then around mid-year, actually for our library, it's like right now we're looking carefully at the budget, we're managing the budget, but now is the time to start talking to the select board and the town administrator about things that we will be looking at or looking for in the coming year. When it comes to September and October, we're going to have to be very serious about prioritizing expenses. And again, we've got a calendar year budget. And then developing the budget and presenting the budget is a long process for us. You know, everybody's situation is going to differ. But it has to be developed, it has to be presented. There's negotiation with the select board. And then it has to be kind of finalized before the annual report is printed and town meeting is published, and then it gets approved for us at town meeting. So steps in the budget process, and I've got 5 really, and number 6 is managing the budget. So just those are the 6. Excuse me. Steps in the budgeting process. Again, strategic, you know, what's your business plan? What's the strategic plan? You have to know about community needs, right? To forecast what you might be spending on next year, what your revenue plan is for next year, your vision and your financial goals. An example of financial goals for our library is, and I could use UVM as well as an example, but UVM is a little bit bigger than our library. And so financial goals, we weren't saving enough for reserves. We didn't have enough money to do capital purchases that we wanted to, replace furniture that's worn out, get some really cool things for kids, you know, to play with and to learn with. So one of our financial goals was to increase our reserves. So in the last 2 years, we've had a $5,000 line item in our expenses that goes to building our reserves. So, you know, things like that. You might have financial goals in raising gifts, raising endowments. That's our next step at the library. We don't have gifts. We don't have an endowment, and we really need to work on that. But that's more strategic thing. You know, when you're thinking about an annual budget, you have to think more short term, like that line item in our budget to just take that money, $5,000, and put it in a reserve. Number 2, what are your sources of revenue? What are you spending money on? You know, where is this information? A lot of companies, organizations kind of do incremental budgeting. That is, they look at past year's actual revenue and expenses and current, and they think about like what's happening with the consumer price index. How's that going to affect labor costs? You know, you try to think of those things. You know, I'm working for a municipality, and like that's very different than a for-profit or nonprofit organization. In municipality, it's all about penny pinching. It's, you know, it's really, you don't want to increase the tax burden too much if you can help it. So it is a very challenging environment to work in sometimes. But we have in past years, for instance, forecast, oh, we're buying new software. The new software is going to require training and conversion. So we've actually increased payroll, and the select board is with us because we communicated that over a time period. Just didn't give it to them at in December and expect them to accept it. But thinking of that was like a new priority. And you're here to learn about project budgeting, project management. With a project, it's or a program, it can be quite challenging because you don't really know like how much some things might cost you or how much revenue you could expect. So the best you can do is research it. Bobby is going to have much better ideas. She's got some fantastic tools that she uses. And then other sources of information, especially about payroll. There's tax changes and things like that. So the information can be found in where you've been, but also to be creative, thinking about what are your new priorities, what are your new projects, research those. So there's a lot of sources of information about these things. Maybe you could find projects that were similar to yours, find the right people to talk to, communicate, and build a community to get that information. I thought you've probably heard a lot about inflation recently, and apparently April was the largest increase over a 12-month period since 2008. So we're definitely in this period where demand is booming, and it's sending prices up. I saw somebody told me they saw a cartoon where for their anniversary, the partners wanted to go to. One of them said, "Take me to someplace expensive." So the cartoon was they were in a Lowe's lumber aisle. So if you tried to build something lately, you can appreciate the 400% increase in labor costs, lumber rather. Excuse me. Okay, it's all about what's most important, and this is all about managing money. You know this at home, you know this at the place of work. You purchase things that you deem are the most important things to buy. Last year at the library, we didn't spend money on some items so that we could spend more money on ebooks. That was a very important thing to do. We also were looking forward to last year, and we spent about $5,000 on new children's stuff for the walls, really interactive wooden things that they can move around and play with. And so we were hoping for this moment where kids are coming back into the library and we'd have something really cool for them to experience. So in your project, you have to know what's important, and you just have to prioritize it, because we'll never have enough money to do everything we want to do. So we just have to decide. Prioritizing expenses, determining if there's additional programs or projects that are coming up that have to be included. Identifying activities that could be eliminated. That's a really important thing. There's like what we eliminated last year? We eliminated buying periodicals. Some of this stuff is pretty obvious, right? But it just shows you that, yes, you can eliminate things from your budget. And that's where budgeting and deciding about a budget get pretty challenging, because you're going to come up sometimes against the status quo, or there's people that lose things as well, people that get things. And so it's more challenging, leading a budget creation than sometimes you can imagine. Establish spending priorities for the coming budget year, any possible new programs. I did want to say that relationships value are this so important. So I think we've been successful in the last several years. We increased our library budget by 30% over 2 years. And it was because of that relationship, because we communicated as best we could with the select board. And we showed value, that what we wanted more money for resulted in value to the community and to the town administration itself. So in the budgeting process, these relationships matter a great deal. And if you're in a smaller organization, it's a little easier than a large organization, but relationships with people who are funding you can't be overstated. Good relationships. Switching to, whoops, I think I'm going to go backwards here. If I can do it, I can do it. So you draft the initial budget. Again, this is a iterative process, drafting the budget 4 or 5 months before the end of the fiscal year for the next fiscal year. You start that early. You get feedback. You share what you're thinking. This year, because it was a really bizarre year with COVID-19, we developed 3 different budgets, different levels. And, we presented it to the select board and said, like, this is what we really want. This is what we would really like. This is like it's just not growing. It's just like holding on. So, but we didn't know what kind of condition the town would be in. What would be the tax receipts? What is the percent of folks not paying their tax bill? Town of Georgia was really fortunate in that things are very unchanged, but things can change. So having different scenarios helps, and developing the budget, presenting the budget, passing the budget. Those are the things that really are necessary, of course. I'm going to pause again, see if there's any questions. I'm looking at the chat. I promise you the next part of this presentation is much more exciting. Because, talking about accounting speak and talking about the theoretical parts of budgeting, it's good. It's really, really important to understand that, to be able to talk to your bookkeeper and understand what they're saying, to be able to read reports and things like that. So the next part will be budget management. And then I'll end with an embezzlement story and accounting controls. I offered to the Vermont League of Cities and Towns to teach embezzling 101, and I didn't even get a smile. It's pretty, because as you know, it's like, it's so awful what happens to people who choose to do that, and to organizations who will, it was not easy. Okay, well, I will go forward. Okay, so number 6 in doing the budgeting thing is actually managing the budget. And there's a couple things that are really, really important. That you get reports on a regular basis. You get reports that you can read, summary and detailed. And that's like the most important thing you can do. If you're responsible for budget, you need to get those reports. You need to be able to understand the reports. That's where you go back to the bookkeeper, ask questions, and look at the details if you have any questions. So I'm going to get more into here. We've already talked about kind of the reports that are available, but if you're using QuickBooks, there are really great reports available that are just really good. You could look year to year. You can have an income and expense report. You can do the monthly report, quarterly report. There's all sorts of reports that you can get, and they're very, straightforward reports. If you're dealing with something like I have to deal with in the library with New England Municipal Resource Center software, it's not the prettiest looking stuff. So it takes some manipulation with an Excel spreadsheet after you download the information, but it's still, you can present it pretty well. This is just an example, and I'm thinking here of how to understand reports better, and I'm just thinking very simple. Now, again, if you have QuickBooks, you're not going to have as much as an issue, but this is like a typical report from NIMRIC. It'll give you the budget, it'll give you the actual. If you want it to, it'll give you, of course, the date. See, in this first one, it just spits something out. So when I share it with my director, of course, adding the date is very helpful because you can see, oh, right, we're in the middle of October, 10.5 months have passed. We have a budget of $100,000. We've spent 86. That sounds about right. Having the budget balance is even, that's even more helpful. Oh, okay, I can see what lines that I've overspent in, what lines that I'm good in. I'm not going to try to explain the negative numbers and the positive numbers here. I'm going to let Bobby explain the accounting of that tomorrow. why a revenue is negative in some accounting. I was just kidding, Bobby. I wouldn't do that to you. But this negative number is actually means it's good. That's a revenue number. So you got $14,000 left. You can see, oh, salaries is good. Oh, sick pay. If we have any more sick leave, we're going to be a little in trouble. Health insurance, that's good because it should be good because it's paid on a monthly basis, and it looks like we got 2 months worth of expenses left. Things like that. Here's another way I make it more useful for folks to read. Folks that aren't familiar with financials don't like numbers. They're my fellow trustees, they're there because often they love reading, they love books, and they have all sorts of other skills, but not sometimes numerical, where I kind of lack other skills that these other super trustees bring, of course. So here you can see percent of budget. So, if you can see, oh, 14%, okay. That's great, 34%. Oh, I see some red lines that sort of indicate we're running out of money in that line. And so what I do to add to that is I add to that where we are in the budget year. So we got 19% of the budget year left. Here are the numbers. We got 14% of the budget left. Now with salaries, it's a little, you have to take this with a grain of salt because you don't know where the pay period is. Right, so if it's at the end of a pay period, people have just got paid. It's much more accurate than in between. But just some tools. If you're using a spreadsheet, if you're using software that just produces or something that is harder to manage, these are some tricks that I use with with NEMRIC software. Again, I have Quicken, which is the kindergarten version of QuickBooks, but still, it's just really amazing what I can see. I've got a little tiny eBay business. And of course, I do my personal stuff on there too. And it's very wonderfully readable reports. So I hope that you don't have any trouble reading those. So we talked about that first point. Second point, I can tell you, I just didn't do what I tell people to do with the library. And I had to submit, I was behind 3 weeks, and I had to submit 20 purchase orders last week. And I made a mistake. I submitted one invoice twice. And what happens if you don't keep up on purchase orders, not only do you suffer, because that was pain causing, but also there's a tendency to make errors because you're so far behind, you're just going to make errors. So keeping up on all this financial stuff really is really helpful. Reconcile monthly. you know, you want to match expenses to receipts to make sure that, just like you do at home with your checking account, you look at them, you say, oh yeah, check that, yep. You know, even if you're looking on screen, you know, if you look on a weekly basis, you can, you won't fall behind. You'll catch any problem quickly. So that's really important to do. Don't let questions linger. If you have any questions about what's going on in your budget, anything, you just ask. You just ask the bookkeeper, and they will be happy to share at considerable depth an answer to your question, because you know, you need to know if you're managing a budget, if you're responsible for a budget, you ask. And if you want something changed, also ask. You know, if you see something that's in the wrong category, you know, bookkeepers and accountants and that we make mistakes too. And so if you catch it, that's fantastic, because that means, you know, more eyeballs are on it. So if you want it changed, ask. Understand what you're responsible for, you know, what in the whole budgeting process and management. And then, you know, communication is really important. We have a new bookkeeper in the town of Georgia, and last week when we're finally able to actually see each other again, she started 2 weeks ago, so I went over and introduced myself last week. She's a really important person to me, so communication is really important. Here's something that's always been one of my pet peeves, is always coding correctly. So imagine you have a budget and a line item is getting down to 0, and you say, oh my goodness, I don't have any money in that line item anymore. I'm going to code it into a different expense. You shouldn't do that, because you want your data to be true. You want it to tell you the story of how you're spending money without any question in your mind. So always try to code correctly. Now, in some systems, Quicken and QuickBooks, it's easier. Your bookkeeper will know where it goes. But in larger systems, you know, it can be it can be something that could be helpful to you. I asked our town treasurer to increase the number of coded lines we have, because with the advent of cell phones that we bought for the library, a cell phone we bought for the library last year, it was getting just packed into telephone. And now we find, oh, it's Xfinity and it's a cell phone. So just separating that is very helpful, because just seeing a phone bill is just like, that's a lot of money. But then seeing it was cell phone and then a landline or Xfinity was helpful. Budgeting time should be budgeted, and then plan for the unplanned, maintain flexibility. We have some challenges. For instance, right now, we want to do a little bit more, which costs more in hours. And payroll budget's really important to, you know, you don't mess with the payroll budget because you have commitments to people. But looks like we're going to be overspending our payroll budget just a little bit. But we have to maintain flexibility in the operating side. You know, we were going to buy something, less of something to pay for that. And that happens. Look at last year. I mean, if you survived last year with a budget, everything was unplanned. You know, we spent so much money on hand sanitizer. You know, imagine that when you planned your budget in the end of 2019. You could have never imagined. Few more recommendations. You already know this. QuickBooks is great. Commercial software is wonderful. Bookkeeper is great. I don't know if your organizations do this, but we're talking about project management, so I have to continue to think about that. But the town has been doing their own payroll, but we're moving to a payroll services company, and it's actually much cheaper if you consider the time we put into payroll. But even there's small libraries that purchase payroll services. So that's another consideration. If you're thinking about a business, if you control the whole budget of your organization or part of your, payroll is complicated. And when you compare prices, it's like, oh, really? It's kind of pricey, but or it could be really reasonable depending on your situation. But you won't make mistakes, and that's I think is a good investment too. A really important thing: every expense must have a documented business purpose. So that's one of the things that's just like foundational in accounting. That it has to be a reasonable expense. It has to be it has to be documented. It has to be consistent with what you normally purchase in your business, but every expense must be documented. And one of my pet peeves, of course, is a register receipt that just says like the amount that you paid. It's got to be itemized. And if there's any question about what the items are, we had people write on the receipt what the business purpose was. And in audits, we actually got pulled because some of the things that we do are in a UVM extension can be considered odd. Like we have a nutrition program that does cooking demonstrations for single parents and their children. And like the auditors were finding receipts from Hannaford's. It's just like, what are you guys doing? It's just like, are you going on picnics? You're going into the clinker. But no, we could show, of course, that it was a business purpose. Thank you, Bobby. Payroll service helps to limit up business liability. Of course, Bobby uses a cost-benefit analysis. That's great. Yep, including your time. And that is like the most important thing, is this like that time. Because if you put it out at $25 an hour, $27 an hour, whatever, the bookkeeper or yourself might be making, it's just like, yeah, my town administrator talked to me last week and she said like, oh my God, like we are going to save so much money in time. Thank you, Bobby. All revenue and expenses must be documented with a trail. That is, you don't want a trailless purchase that'll get you in trouble. And an audit makes certain that the books are good, right? It's a sampling procedure to see if anything is amiss. So the auditor looks at certain expenses, asks the accountant or bookkeeper to pull up the documentation for certain expenses. They go over that, and then that's basically how an audit works. I have auditor friends who would be able to tell you a lot more about auditing. Somebody I'm friends with creates all the documentation for the UVM audit, and I think he's up to 342 spreadsheets last year, the poor guy. But he's an accountant, he likes it. Okay, a little stretch, maybe a little breathe. So many questions. Anything at all? Give you a few moments while I step out and have a drink. Okay, well, I'm moving along more quickly than I thought I would. So I sort of gave myself a couple minutes per slide, and I was trying to push myself through this, but that's good, right? Because it's a sunny day out and you've got other things to do. But the last part of this is budget control. So these are just some things that you should know about project management, about general accounting, about cash management, about keeping the till safe. So And the left-hand side, it talks a little bit about the activity, you know, what control is. It's just basically making sure that your money is is handled the way it should be. And if there are any issues that are seen, you know, you just correct them. And Cash, is this a little Johnny Cash joke here? I know I'm kind of dated. But there's interesting things that I've learned. I learned of one business that their petty cash was kept in a string bag on the coat rack. So like if you needed some, you there it was. So that's like not a good practice. So we'll talk a little bit more about the practices. But first, a bad embezzlement story. Not very, and I'm just going to add a disclaimer. Okay, I was not the financial manager at the time, but I was asked by the dean to clean it, to work with auditing, to work. You know, I went up there, I seized all the computer, I put this poor employee, not poor employee, the employee on administrative leave, and then it was a 2-year situation. So $45,800. I remember this. What I remember most about this is really the price that was paid by the employee that did this. And although she has all the culpability of you know, stealing this money, the organization failed her as well, because we didn't have the right controls in place. You know, it was a very small office. There was just one person handling the cash and money. And we just didn't have in process the things that are essential to have in process. And I'll talk about those after this. She paid all this money back out of retirement funds. So that was another way that she paid for this. And what happened was that she ran the business and registration end of a program that we had, and it was a fairly it was a high revenue kind of program. Every year, what's the budget? I think the budget's about $120,000 a year. So you could think of it as a project. We had to budget this program on a yearly basis. And where it all failed was that she was the one, there was no segregation of duties. She was the one that collected the money. She's the one that deposited the money. She's the one that created the registration list. She's the one that reconciled. She's the one that gave the reports. And one day our financial manager got a telephone call from a bank in Newport saying, you know, we just can't do this anymore. And the financial manager, you can imagine the look on his face, maybe all the blood drained out of his upper, you know, all into his heart, and he went into some sort of trauma. But they said, we just can't keep cashing these third-party checks. It's just not good business practice. And that's what happened, is that she would countersign it, had, you know, she was known in the community, and she just said, yeah, this is for UVM Extension. This is this cash. And so it was, if you can read the print, the university was tipped off due to a letter from Community National Bank that contained a check for $1,425 that was deposited into her own personal account. So really bad things can happen, you know, for family life and for your organization and for kids and all that stuff. Is pretty lousy time. Whoops, what the heck happened? Can you see, what can you see right now?
The beginning. Now you're scrolling through.
Yeah, somehow I ended the presentation. I don't know how I did that.
Mm-hmm.
Sorry about that, folks. It says it's the end of the slideshow. How can that be?
that the last slide?
No, it isn't.
Uh-oh.
Let me stop sharing.
Mhm.
I don't know how this could happen. So,
Any questions for Gary while he's
yeah, while I try to figure this out.
pulling up?
It's all there. Huh. I'm going to I'm going to close that whole software because I see the slides.
Your computer has left work for the day.
Well, let's see. That's interesting. When I go to show the slides, it ends it. I'm going to try something different. I'll have to, right? So bear with me while I do a stretch. So this is just going to take a second. Stretch.
Do you have the PDF I could send out, Gary?
Yes, right. You do have the PDF. But let me do it that way. This will only take, you could time me. It'll take 30 seconds, maybe. Maybe. Well, I've never had that happen before. There it is. Okay, let me bear with. Thank you for your patience. There we go. What I'll do is I'll share my screen, I think. It's not going to be the best, but okay. Hello?
Yeah, we can hear you.
Oh, okay. Now I have a signal that a little window that says Zoom meetings is not responding.
Oh, you're frozen.
Oh, I'm frozen. Okay. Okay, I feel frozen because it says not responding.
I do have the PDF if you might. I don't know if you'd be able to see it when I share it.
Yeah, I can actually, no. Yeah, you guys aren't frozen in my screen. This is very odd. Why don't I get out and come right back in?
Great.
Okay. Okay, sorry about that.
While we're waiting for Gary to pop back in, just a reminder, part 2 is tomorrow. That starts at 8:30 with Bobby Kilborn, and she will be going into what Gary had mentioned earlier, a little bit on capital budgets and project budgeting using, a real life project. And then we have the second half of that is the getting more money section, and we have John Michael Muse of USDA Rural Development, Kevin Weiberg of the Vermont Community Foundation, and Katie Buckley in her newest position with Vermont Leagues of Cities and Towns to talk about the ARPA funding. So, and then Gary is offering one-on-one technical advice next week. So if you are interested in that, you can just shoot me an email and we can schedule something with Gary.
Okay, I think I'm back whole, right? So I'm going to try sharing my screen again. Thanks again for your patience. I also appreciate that everybody appreciates this kind of stuff now. It's just like bizarre things like this happen, you know. At least the UPS truck didn't come by and my dog go wild, which sometimes happens. So can you see the screen?
Yes.
Okay. So this was what we left off on, and here's the next. There's only a few more slides left, so you're at the end almost. Budget controls, 6 ways to keep out of prison or get into prison, depending on what you want to do. Authorizations, we talked about that a little bit, right? Purchase order is an authorization to spend money. Reconciliations, segregation of duties, physical safeguards, records and information systems. So this touch upon those one by one. Authorization, it's basically it requires some system to formally approve certain types of transactions. I don't know in your organization, but in like UVM, you can't spend more than X amount. You need a purchase order above a certain amount. With a credit card, you can go up to a certain amount. So, that's a form of cash. That's a form of authorization. Reconciliations, this is, again, looking at the data you have, maybe for your checking or your business's checking account, making sure that the receipts that you have on hand match what you have identified, what the bank is telling you. So reconciliations is something that's very important to do. Other types of budget controls equals segregation of duties. That's one thing that is really important. You just separate who does what. After our embezzlement, we had a strict rule of segregation of duties. And, we collected cash money all over the place because we would have these, we have all sorts of programs. And a lot of the programs are like, $25, $20, $5, $10. Excuse me. So you'd have, what we'd required was in any venue that had registration fee, you'd have to have 2 people. One person, to take the cash, write out the receipt. Another person does something else. At the end of the day, bringing the cash to another person. Now, the challenge is, of course, if you work in a smaller organization, is the segregation of duties. We have an office. Our office in Newport has 1 person in it now. Excuse me. So segregation of our duties are really important. Having people do different things. Physical safeguards, these are things like locks and cameras, barriers to protect assets. You can think of this in the HR world too. It's just like records, personnel records, you have to keep under lock and key. You have to protect those things. So another physical safeguard that we had to purchase for every office was a safe. And I just worked with the library in developing their cash management policy. And one of my recommendations was, because they did fundraising, like at the end of a Saturday, and they had cash and they couldn't bring it to a bank, I said, you gotta buy a safe. They're fairly inexpensive. The ones that you have to bolt it to something, it has to be bolted to something. But safes are a good thing to have if you handle a lot of cash, or any any bit of cash. It just keeps everybody safe, reduces the liability, which Bobby had mentioned before about payroll. These things, all these things reduce your liability. And that's a really important thing, I think, to think about is also the perception, your liability to the perception. So if you don't do these things and there's any question, man, your reputation could be dinged. So if you practice good budget controls, you're doing yourself and the organization a lot of good. Maintaining records, that's what QuickBooks is all about, right? Electronic evidence to support transactions, files full of invoices for X number of years. That's why we do it. We maintain records for budget control. And then information system security, using passwords. Now at UVM, there's nothing I can do without dual authentication. That is, I have a password, but I also get a text or a telephone call saying, is it really you? So enter your code. So these things are important to reduce access to the people who only need access. And it's just an example of a budget control. So just reviewing the objectives here, I've got library in there. I didn't edit that out, I'm sorry. But your organization, your nonprofit, what you're thinking of for profit, your project, appreciate how your organizational values and vision and mission relate to the budget. You understand a little bit more about the budget, what it is, be able to describe basic accounting terms so that you can understand a little bit if you had a question for a bookkeeper or a question for an accountant. And also, know about in the budget cycle and then managing the budget about, asking questions, being able to understand the information, and then understand just a little bit about financial controls. There's a reason, why there's a cash register and why that data gets uploaded from businesses, to the main ship every day. And that's why there's written protocols about how you manage cash. And that's why there's written protocols about what petty cash is, how it can be used, and how it's managed. All those things help just avoid unfortunate situations. Just wanted to, thank you very much for your time. I hope it's been helpful to you. I do have your email addresses, so I'd like to send you an evaluation, and it's going to be a very short evaluation. So if you could answer those few questions, kind of a standard sort of teaching evaluation, I'd appreciate it. You can always reach out to me. Here's my email address. And also, if you wanted to see what I've written about budget and human resource management, I do have a website. It's Vermont Public Libraries educational program at UVM Extension. If you just search for public libraries and UVM Extension, you'll find it, I think, pretty easily. As you can imagine, most of my work in the last 15 months has been around HR. Questions about, can vaccinations be mandatory? How do you remote work for non-exempt employee? There have been so many challenges and questions, probably that your organization has faced as well. So done a lot of HR work, and I've written some things that might be of interest to you. So the last thing I wrote was just published today, is on the, there's a lot of people quitting jobs right now. There's more than ever. It's a recent poll said 52%, and these are 2,000 respondents, 52%, so they're quitting. They're finding a new job. And, we're feeling it at UVM Extension. And so I wrote a little bit about this, what they call the transition tsunami. And I also have a few tips about how to try to keep great employees and how to hire great employees. And then this was specifically written for the library crowd, how to, what to offer to employees, potential employees, to attract them under a low wage situation, because no one gets rich at a Vermont Public Library. So they get rich in other ways, though. which is the key.
Thank
So-
you so much, Gary.
Yep.
Questions, comments? I know someone had asked about the link for tomorrow. It is the same link that you used today, but I will be sending out an email just now, sharing that link again, as well as a PDF of Gary's slides. And then also, if you do want some one-on-one, if you have a specific issue that you're trying to work through or some specific questions, we do have some one-on-one spots open next week that you can sign up for, and you get about an hour and a half of Gary's time, which is quite valuable and for free. So,
And we can talk about anything. So, I mean, it could be stump the chump, and I'll be stumped quite a bit, but I will find the information for you and try to help you as best I can.
there you go. Great. Any last questions before we head out into this lovely sunshine? John?
Nope, just thank you.
Oh, well, thank you.
Thank you, John.
All right, everyone. Have a great evening. We'll see you back here at 8:30, and you'll be getting an email from me with slides and just a reminder of the link.
Thank you, Sarah.
Thanks,
very much.
Gary.